Hello everyone. I hope everyone's having a good afternoon and everyone had a good Wednesday. And today we're going to be doing a breakdown of the past 2 days, and we're going to be doing a market recap, and we're going to be going over many things that happened this week. And these past few days has been really textbook, and I believe that it's because we have such a good drawn liquidity, which is, as you can see, is this monthly low here, which around 4 months ago, the earning growth reports from the tech sector companies, it was really positive. It was higher than expected, so this caused this higher run here. And also the whole AI thing with NVIDIA and mostly the tech companies and overall stable GDP growth caused this run higher here. And this month, it started off with the earnings report coming back lower than expected. So that caused this push lower here. And there's lots of liquidity within this range here. And, this low here being reached so close to, but not quite, is very significant. And I will get into why it is and how it's fractal and how you can implement it in trading. And I actually had my take profit for one of my trades to be the low of this one, where price went really close to it and then started trading back. Now, I'll explain why that makes sense, and Ice-T actually speaks about it in his second latest live stream for the 2024 mentorship, and it has been very helpful. So let's drop down to the weekly, and I want to talk about this piece of price action right here. So we have a gap here and then another presumed gap that was going to be formed here unless we got a immediate rebalance. And that's what we got. We got a immediate rebalance. And also another thing that's interesting here is that we have a BPR as well. And BPRs, they are efficient price ranges, so they don't have to be retraced to. There's nothing lacking inside. There's no gap that needs to be filled with efficient price ranges. And I think that's one of the main reasons why we got this immediate rebalancing. It lines up with the idea that this gap will not be retraced to as a breakaway. And I want to go on the daily, and I want to move into a deeper thought of this immediate rebalance. I was speaking actually about this price action with a friend, and we kind of both had the idea that this gap was going to be a breakaway, following the same idea of the higher time frame, where we have a gap here and then a presumed gap here getting immediately rebalanced, and also a BPR within here as well. And since it's efficient, it doesn't have to be retraced into, and we're expecting price to just drop lower from there. And after this happened, and we were failing to go into Thursday's high, which was a high and a low, which contained lots of liquidity. It was a inside day for Friday and Monday. Okay, and then once we got this big drop lower here, I was thinking that, okay, we're gonna start pushing lower and lower, and we're probably gonna see this as a breakaway. But what I failed to realize is that we're going to meet higher time frame objective. And what does the higher time frame objective tell us? Higher time frame objective tells us that on the weekly we have a BPR and we have a presumed immediate rebalancing. If it doesn't happen, it doesn't happen, and it doesn't matter. We don't have a say on whether it happens or not. But if it does happen, then we can set more conditions. So this week's low here, I did not want to see it met. I actually just wanted to see a equilibrium of this range here to be breached, and then we start dropping over from here. So just about our price point of here, and you hear me talking about this in the outlook for the past. The outlook for, I think, 2 weeks ago. Yeah, it was the outlook for 2 weeks ago, and how I wanted to be Thursday's high to be breached as a buy side sweep of a nested high, and then immediately a push lower. And I had some more details on it. I think if I jump on the 4 hour, I can see. I wanted to see this push higher here being left as soon as possible, and be used as a order block, which we do, but we don't get a retrace into it. I don't think we are going to get a retrace into it, and I'm going to deep your reason why. Okay, so yeah, this is just a side note to always take in consideration higher time frame objectives, because higher time frame holds higher power, and price will meet higher time frame objectives before it meets lower time frame objectives. So if price has a bigger interest of rebalancing the previous week's range, then it's going to do that. It's going to make this price range efficient. It's going to start moving over from there. Just because the daily had this immediate rebalance and this small drop lower, taking out Thursday's low, doesn't really mean anything. Anyway, yeah, so let's move into this week. I can delete these. Oh yeah, by the way, I wanted to see this up close candle here, get the space through, and this is a formation of an order block. And yeah, no retracement to it, but I don't think we're going to see a retracement to it because of what price is telling me right now. And I will go into that now. So let me go on the 4 hour and keep that sell side and group on here. So there's lots of drawings here, and it's easy to get what many people call analysis paralysis, but it's very simple and it can be broken down into stages. I want to take off the drawings for a second actually, and I want to go through something here. So the key points that I have is this new week opening gap here. This is a key level that we had, and the reason that I thought it was going to be traded into was because of this range here. So my first suspicion was that if we were to move lower, we're going to move lower off of this gap. But you see what did price do? It's inversed it and started pushing higher and higher. And then once it reached around the end log and started accumulating, you can expect a second stage run to happen. So, and that's what happens here. So price goes into the log, has a small push lower, inducing people into early shorts, and we have willing buyers at this high here. Once price does this move lower here, it accumulates liquidity within this trend lower here. So, accumulation is not always with the consolidation. It can also be with trends. Price pushes higher, and then it takes this high here within a key level, and also actually I'll put the drawings on from now, and I'm going to the 1 hour so you can see the arrays that I was speaking about. So we have the NWOG and the first push higher and then a push lower here, which is very significant, and I'll tell you why. You can notice here that we have a high and then a low, and we failed to make a higher high, and then we have lower low. This leaves us with what? First of all, we have a mitigation block here that price uses as support to push higher. And also, here, another thing that you can see within this piece of price action, ignore everything on the right side and just look at the price action where we have this market maker model here. So notice the push lower here, push higher, another push lower, and then we get a continuation higher, and that's what I have labeled as X. And if you think about it, this is what's happening on higher time frame, just fractally. So we have low, high, lower low, and that's what happened here. We have high, low, higher high, and then we make the lower low. But what's interesting about what happened here is that we had the failure swing. When we have cases like this where the lower low is failed to be breached and failed to be displaced through and then used as order block, we can anticipate something called a final purge to happen. So this is just a this is just the algorithm's way to take out any liquidity that was left over from literally anything. People that saw this as a resistance level and started shorting from here, and people for whatever reason, maybe RSI indicators are crossing, EMA, whatever, MACD, the algorithm since it's efficient is going to run back higher here, take out any resting liquidity that was left on this high, clearing out everything that we have here. And as you can see, we have this big drop lower, confirming that there's no more liquidity, and then this high probability sell side liquidity, which was breached, is now going to be using this move higher here, this entire range, as an order block. And the most sensitive range that I have here is high, low, higher, high, lower, low, which is this down movement here. So this is a very sensitive range, and this is a breaker high and breaker low. And about the thing that I was speaking on with the monthly and how the low is so prominent is because it's a failure swing. Notice here, we have this push lower here, we try to reach higher, fail to meet high probability sell side. You know, it's high probability, it's really high probability to be met, especially considering the framework and the breaker framework and everything that's been happening with the liquidity imbalance cycle. So you see a premium gap here being disrespected, a order block being pushed through that held price towards the second manipulation, which is this run here, and then a mitigation block being displaced through, which we previously respected. So there's obviously a shift in narrative, there's obviously a shift in where we want to move towards. But then once we start seeing a move like this, where we start rejecting off of the the discount of the premium of a wick, then that starts to raise questions. That starts to raise that, okay, maybe price is going to have a third push higher, sorry, as a final purge. So we have this first mitigation, a push lower, second mitigation, push lower, and then a third one, which is the final purge, and anything above that I think is, it's crazy if it's not a SMT. If we do have a push higher here, I'd like to see it SMT with ES or the YM. And if it doesn't, then I think the idea of a fourth soup is very improbable. Anyway, also within here, these bodies, and if you go on the line chart, you can see that this is kind of an accumulation range. Price pushes lower, closes below it, and that gives us the line chart moving there. So you can see the line chart doesn't have the wicks. So this is also a sweep of liquidity on these bodies. So you see the body low, body is liquidated, closing below both the bodies, and that induces a push higher to the final purge, and we deliver to the final purge within this discount gap, and we sweep the second mitigation high, and then displacingly push lower, engulf this whole entire range, and now I'm looking for this range to be used as resistance. And something else that I want to note here is this. If you guys know what a head and shoulders pattern is, let me get out that way. I want to show you guys. The #1 retailer Rick trading style. So, the head and shoulders pattern, it's infamous. It's also people trade it, and some people are profitable with it, some people are not. But it's basically the idea that price has a shoulder, a head and a shoulder, the neckline being used as support initially, and once it's broken, there's a breakdown. So, you can place this narrative here. Lots of people look at sell side and buy side and just say, okay, we're going to reverse off this move here. Liquidity is a very complicated concept. I believe that the only liquidity sweeps or total soups are the ones valid within a breaker foundation. And ICT talks about this a lot. Even in his most recent video or his live stream, he speaks about an example that happened on on Tuesday, where he didn't catch the turtle soup, but he knows that the turtle soup that will happen at the low is going to lead to a push to this NWOG. And the turtle soup, all that it was basically a push higher, a push lower, another push higher, another push lower, serving this as a initial mitigation sweep, and then he started to see an inversion. And then also there was a unicorn gap, which was with a breaker. And when I was actually watching it, I wanted to see this inversion, this gap here, to be disrespected and to be taken towards this low here. And this piece of price action, actually we'll get into it in a bit. I think I have it on my Notion journal, and I'll have it on my day reviews. Just give me a second, I want to pull it up. Here. Drag it over here. So this is sell high below, and you see we have the high low high, lower low, and that's the true soup. This soup here, oh no, that's not a soup. This soup here is insignificant. This one here is insignificant if it doesn't play a role in breaker foundation. And you can see I had that gap here highlighted, and I want to see that inverse because we were so close to drawn liquidity, and I just want to see it met. So yeah, so we have a low high, lower low, and then a higher high, and then this gives us the breaker here, and that gives us this unicorn gap. And I wanted to see it inversed to take it to the drawn liquidity, but that didn't happen, and it was nice to take notes on, and I learned. I got what was I speaking about? I was speaking about the neckline here, about the retail ideology. So as I was saying, people view liquidity as just highs and lows, but it's actually very logical highs and lows, and it makes sense that these highs and these lows are the points that price sweeps for, And many people would have looked at this low and said, okay, that's liquidity, we're going to sweep it, and then we're going to have a market shift, and then we're going to inverse this gap, and then we're going to get a fair value gap in 2022 entry towards these relatively equal highs. And the reason why I say that's flawed is because, look closer. We have a retail ideology of a shoulder, neckline here, a head, and then what people would have anticipated is the retail minds would have anticipated a push lower in here onto this neckline, found support, created a shoulder, and then started to push lower. But what happened is they are willing buyers. People look at lows and they say they are willing sellers. But logically, what they are in this scenario especially, is they are willing buyers, not willing sellers. So not every high has willing buyers, and not every low has willing sellers. In this case, the low has willing buyers, and once price triggers their buys, it completely cannibalizes them and takes them out the market immediately. So that's just some more liquidity points. And let's move into the trade recap, and we'll be done with this video. So I want to do this really quickly because I don't have too much time. I have around 1 minute. Let me turn off the drawings. Put on my executions. Here. Okay, so following the same idea that happened on Tuesday, where I wanted to see the second manipulation run on the hourly, I'll label it really quickly so everyone can see where it is. Okay, so my drawn liquidity being this high here, I looked for my framework, which is basically a mitigation block that would help deliver towards the drawn liquidity. So my model is mainly towards continuations. I don't like trading reversals just because I can't anticipate them the best, and why would I want to anticipate something that I can't? So yeah, here, draw this out, premium, discounted mitigation block, and I want to put this right here, and then we can drop it to the 5 minute and see what I saw. Okay, so that's a long 2 minute actually. I remember. Yeah, here. So the deepest quadrant 4, quadrant 3 discount gap was this gap here, and it's significant because it's the deepest one in discount. The 15 minute, the 1 hour gap can be inversed, and if there is a small 1 minute gap that holds in a deep discount, then that is completely valid. Price is fractal. It's not going to go off of just one idea. So notice here, what happened is that we inversed this gap here, and we also inversed the 5 minute gap. But you always have to look closer and notice that with such strong drawn liquidity, we have strong bullish ideas. And with strong bullish ideas, we have bullish arrays within discounts, and then we can start to anticipate higher prices. The framework of this trade was honestly amazing. It was there was basically no flaws It was very clean. Although it put me in more drawdown than I would have liked to be in, it was still a very clean and high probability trade. So I want to notice some things with you guys here. The first thing I want to take a look at is on the 1 minute chart, actually. This is annoying. Yeah. So my short-term intraday draw was this high here, a high in a fair value gap. The reason why this was prominent was because of this high here. If you go and try to take any high in a fair value gap, for example, or low, see this low here, try to short towards it, it's not going to work. You need the right framework. The framework within here is that this failure swing is what I call a sigh in relief for retail traders. Price, whoever has their stops on this high here, they enjoying some profit, and then the price got really close to taking their stop, and this is where the sigh in relief comes. They let out this big this sigh that, okay, thank God, I wasn't stopped out, we can start moving lower now. And this calls for urgent liquidity. So this high is going to be this high here, which people that have been short from here and here have their stops at this high. So it's high probability to be taken. And notice the framework here, actually. We have a low, high, lower, low, and what was I anticipating? A higher high. And a higher high, this being taken, would lead to this being taken as of the logic that I just mentioned. Another thing that was actually interesting here is this high, low, higher high, lower low. So this would give us a what? This would give us a breaker within this high, low, a breaker high, breaker low, and where's the highest premium gap within this unicorn area? It would be this gap here. And this is the only thing standing in the way of bullish ideology. So if we were to move lower, we would have moved lower off of this. This is in the way of us moving higher and meeting a higher time frame draw of 18,435. So, and when I saw this inverse, I said that, okay, there's no what's the word for it? There's no scenario where price would move lower off of purely a raise. So I saw this being inversed here. I put my stop at a Nestor block, and then I took my profits at this high here. So a close to 1 RR trade. Very high probability, even though I did with some drawdown, it was still very nice. And looking back now, I don't want to say I should have, but I could have let this ride towards the draw on liquidity, and that would have delivered nicely, because I said that I'm looking for a mitigation block to deliver us to draw on liquidity, and I took profits shy of the draw on liquidity, which is basically the whole idea of using the mitigation block towards draw on liquidity. So I kind of went against my own thinking there, but we live and we learn. And I'm glad that I took this trade, and it was very high probability, and it was nice to see. I did get psychologically speaking, I did get some worries when we took this high here and started pushing lower, because I did not want to see this be taken as turtle soup. I wanted to see this be pushed through and be used as a breaker, and then use this move lower here as a order block. And you can see that did not happen, but if we were to retrace lower into there, it probably would have. Yeah, so that's generally it for the past 2 days, and I'm still looking for bearish price action. This past week has been very textbook, and I as I mentioned, it's probably because of price trying to meet a high time frame objective, and when price has a rush and it has a objective that it needs to meet, it will honestly give very pure and very dealable price action. You can deal with the price action very nicely. So yeah, that's gonna be it for this video. I hope everyone learned something, and hope you guys enjoyed this. And yeah, I'll be looking to take shorts toward the slow here. And this is not financial advice. Do not follow what I'm saying. This is all simulated hypothetical trading. And it's up to your own risk. Trade how you would trade. And thanks everyone for watching. I just want to mark this out. Yeah, okay, so that's gonna be it for this video. And have a nice day, everyone. Be safe.